Palantir jumped 29.5% today. Caterpillar rose more than 5%, and several major chip names gained between roughly 3 and 8%. The lesson is not to chase those moves tomorrow. It is to understand what created them, what could have been prepared before they happened, and what confirmation still matters now. Then we will reveal the fully updated top 10 calls and top 10 puts. This was not one isolated squeeze. The S&P 500 gained 1.8%. The Dow added 1.7%. The Nasdaq Composite jumped 2.6%. Palantir gained 29.5%. Caterpillar rose 5.6%. Broadcom added 6.6%. Micron climbed 7.6%. And NVIDIA gained 2.6%. Two larger forces helped the tape. Brent crude fell below $80 per barrel, and the 10-year Treasury yield eased to 4.62% from 4.70%. Falling oil and yields do not explain every stock, but they reduce pressure while strong earnings rewarded individual companies. Palantir's move followed a second quarter in which overall revenue rose 93% from a year earlier. The company also raised its full-year 2026 revenue forecast. That is a surprise stack. Rapid growth, better-than-expected profit, and stronger forward guidance arriving together. The market did not wait politely for the next morning. It repriced the stock immediately and then carried that reaction through Tuesday. Caterpillar produced a different version of the same principle. It reported stronger profit and revenue than expected, crossed $20 billion in quarterly sales and revenue for the first time, and described strong order rates with a growing backlog. The company also has exposure to data center power demand through its turbine business. The stock rose 5.6%. The common thread is not by every earnings beat. It is that a large move usually needs a real information change, enough surprise to exceed what was already priced in, and enough liquidity for institutions to revalue the stock quickly. Here is the process for putting yourself in position before the next move. Stage 1 is the calendar. No earnings, investor days, economic releases, regulatory decisions, and major product events before the session begins. A catalyst you learn about after the gap is not preparation. Stage 2 is context. Compare the stock with its index and sector, then check rates, oil, and any driver that matters to that business. Today's broad rally made it easier for company-specific strength to expand. Stage 3 is confirmation. Let the opening range form. A useful continuation setup requires a break, a hold, and an orderly retest. The first green candle is not confirmation by itself. Stage 4 is the contract. After an event, the underlying can move correctly while the option remains a poor entry because the spread is wide, the premium is inflated, or implied volatility is collapsing. Recheck price, liquidity, time to expiration, and the entire premium at risk. Stage 5 is accountability. Record whether the condition triggered, failed, or never triggered. The plan must exist before the result. Otherwise, hindsight can make almost any chart look easy. Research on earnings jumps reinforces the warning. Earnings information is often incorporated extremely fast. That does not eliminate every post-event opportunity, but it does mean the easy-looking gap on a finished chart was not necessarily available at a sensible option price. Our August 4th scanner placed Palantir at number 5 on both boards. The September 18th 175 call and the September 18th 155 put. That is not a recommendation to buy both sides. It means two separate contracts met the public research qualifications after a huge event move. For Wednesday, let the first 15-minute range form. The bullish map requires a break above that range, a hold, and an orderly retest. The bearish map requires a break below the range, a hold, and a failed reclaim from underneath. In the middle, we wait. No trade if the stock extends without a retest. The option spread becomes disorderly, or the premium no longer offers a sensible risk boundary. After a 29.5% day, refusing to chase is part of the strategy. Here is the full August 4th call board. Every contract expires September 18th with 45 days remaining. 10. Cameco $100 call, observed, ask $4.50. 9. Rivian $17 call, 93 cents. 8. Tesla $3.50 call, 13.10. 7. Tech Resources $70 call, 320. 6. Taiwan Semiconductor, 440 call, 1940. 5. Palantir 175 call, 790. 4. Nokia, $11 call, 66 cents. 3. PG&E, $19 call, 99 cents. 2. NVIDIA, 225 call, $8. And number 1. SoFi, $20 call, 82 cents. 6 call names are new since yesterday. SoFi moved to number 1. NVIDIA, PG&E, Nokia, and SoFi remained. The rest of the board changed. Now the complete put board, also expiring September 18th. 10. HPE, $50 put, observed as 490. 9. Tempest AI, $45 put, 360. 8. JetBlue, $6 put, 35 cents. 7. BigBear.ai, $3 put, 33 cents. 6. Intel, $95 put, 885. 5. Palantir, 155 put, 805. 4. Oracle, 140 put, 1180. 3. Tesla, 310 put, 1185. 2. NVIDIA, $200 put, 695. And number 1. Rivian, $15 put, 91 cents. 9 put names are new since yesterday. Only NVIDIA remained on the put board. This is major turnover, not proof that yesterday's candidates won or lost. SoFi September 18th, $20 call. First is SoFi's September 18th, $20 call. The frozen underlying was $18.58 and the observed ask was 82 cents, with volume of 4,473 and open interest above 29,000. For Wednesday, the call needs relative strength, a break and hold above the opening range, and an orderly retest. A failed breakout or loss of the retest pivot invalidates the map. RIVN September 18th, $15 put. Second is Rivian September 18th, $15 put. The frozen underlying was $15.85 and the observed ask was 91 cents, with volume of 2,331 and open interest above 20,000. The put requires a confirmed breakdown under the opening range and a failed reclaim. If Rivian recovers the breakdown pivot or never produces a clean retest, the map is invalid. NVIDIA two-direction map. Third is NVIDIA, ranked number 2 on both sides with the September 18th 225 call and 200 put. That is a two-direction research map, not a contradiction. A confirmed upper break activates the call watch. A confirmed lower break activates the put watch. The middle is a wait. NVIDIA's next scheduled earnings report is August 26. So tomorrow's decision is about price confirmation and contract quality, not an immediate earnings gamble. IonQ also demands an event risk warning. It reports after Wednesday's close. Its Tuesday move is not permission to hold an unplanned option through that binary event. Reddit's Palantir mood turned strongly bullish and celebratory after the report. Some participants who expected a sell-off admitted the result surprised them. Others still debated valuation, volatility, and whether the move could hold. That disagreement is useful as a mood reading, but it does not change a rank or create a trade. Social attention tells us where emotions may be concentrated. Price, contract quality, event risk, and a predefined invalidation still make the decision. Tomorrow, choose one stock from the board and write 4 lines before the open. 1. The known catalyst or market context. 2. The opening range condition that would confirm the direction. 3. The level or behavior that invalidates the idea. 4. The condition that makes it a no trade, including a bad option spread. Then classify it after the close as triggered, failed, or never triggered. Do not move the rule after seeing the result. No approved fixed horizon outcomes exist yet for today's snapshot, so none of these candidates is a win or a loss. Every published watch returns in Friday's scorecard as triggered, failed, or never triggered. That is how a watch list becomes a record instead of a highlight reel. Educational research, not personalized financial advice. Options involve substantial risk and can expire worthless. Verify live prices, liquidity, events, and suitability before making a decision. Big moves are not caught by guessing harder. They're caught by preparing before the catalyst, waiting for proof, and refusing the chase. One lesson: one ranked watch list, one disciplined process. This is the best chance daily, professional level tracking for regular people with regular jobs. I'll see you after the close.